we mentioned Vancouver, Victoria, Toronto, Ottawa. You guys are in the US as well, right?
Correct.
And how are you viewing, we'll talk about multifamily first before development, but how are you viewing the multifamily market? Interest rates are all over the place, but down since the beginning of the year. We've seen some of the institutional investors take a little bit of a step back from value add. Cap rates are up a little bit. The private investor has really come out to play. We have out of the 8 deals that I have under contract, 7 of them are with private investors, and these are larger acquisitions as well. How are you thinking about that space for just general multifamily? Do you guys, is there any appetite to acquire today existing? Is it more a focus on development? How do you make that determination?
I'll be careful to draw a distinction between Minto Apartment REIT, which is the principal vehicle through which we hold core and core plus multifamily assets, and the REIT market, public REIT market in Canada over the last 4 years has gone through a series of convulsive shocks, I'll call it, starting with the pandemic and the deurbanization theme that sort of developed in that. But then, obviously going through the monetary policy response, flooding the economy with cheap money, and then the inevitable inflation. Exactly. And then we had some inflation, obviously inevitable, and then very, probably the most violent monetary rate tightening cycle I'd lived through. And through that, what we've seen is that the public REIT markets, particularly for multifamily, have really been impacted. We'd seen, in effect, the ability to raise capital through follow-on deals very, very constricted for the last 4 years, I would say. And so we've seen, publicly traded REITs, and this is, to your point, with the majority of the acquisition transaction activity that you've seen from a buying perspective been privates. I mean, the public REITs have really been limited to, harvesting capital, redeploying capital through asset sales to buy new stuff if they've been able to buy it all. And the level of transaction activity has been muted as a consequence. And part of it is the public markets focus has really shifted. If you looked at it in the late 2019, 2020, the focus was very much on NAV growth, growing NAV. That was the emphasis. Through the COVID crisis and the cap rate expansion that followed with the volatility in bond rates is that we saw the focus change to cash flow growth, and that emphasis became critical. And so looking at cash flow accretion or dilution in evaluating an acquisition and what would be the market reaction to an acquisition when we were seeing REITs trading at significant discounts to NAV became quite problematic. And I would say we're starting to emerge from that. We've seen over the last couple weeks, couple REIT IPOs. We've seen Starlight announce a deal for a core multifamily fund. We're starting to see, I'd say, some beginning signs of an interest in the multifamily sector that has been dormant for quite a while, trading at massive discounts to NAV. And I think maybe there's a dawning awareness of that discount is just too big. It's too good to be true. Maybe we should reevaluate. I think there was, I talked about convulsive shocks earlier. Another one was the change in immigration policy. Between 2016 and let's say 2022, we were, as a country, growing at a furious pace, population growth wise. At one year, over 1.3 million people. Yeah. And without the corresponding changes to housing policy, education, and healthcare to accommodate that kind of population growth, and we saw predictably, rents grow very rapidly. Then the immigration policy reversal, a very abrupt reversal in 2024, and I think, you saw the REIT sector had a early sort of signs of what looked to be a recovery in the late summer of 2024. That quickly reversed with the immigration policy change or that announcement. And I think probably the REIT sector was oversold as a consequence. Now enough time has passed that, I'm hoping the market is looking at it and saying, geez, we've survived somehow miraculously, and REITs continue to grow cash flow. And I think there's starting to be more private market transactions that are supporting the assessment of NAV.
Yeah.
Because for the longest time, there was an absence of transactions. You couldn't really say concretely what the cap rate was. There just weren't enough comparable transactions. So that's starting to change. And I'm optimistic that, maybe we're coming out the light at the end of the tunnel there.